Why is Bitcoin surging?
My view is surging because there is a massive amount of manipulation. There are pump and dump schemes. There is spoofing. There is wash trading. There is front running. There is the issuance by tether of a fiat currency not backed by much. That's used to manipulate the price of Bitcoin. I think it's a bubble. Fundamentally, Bitcoin is not a currency. It's not a unit of account. It's not a scalable means of payment. It's not a stable store of value. Not even Bitcoin conferences accept it as a means of payment because the price volatility implies that your profit margin can be wiped out. And it's not even a single numeraire. You know, the Flintstones had a better monetary system than Bitcoin because they had the shells instead of having a different token for different purchase of goods and services. So these are not currencies. Calling them cryptocurrencies is a misnomer. They're not even assets.
Nouriel, I want to get to the heart of it, and I'm going to go to Raphael Auer's path-breaking work with Benoit Cœuré at the Bank of International Settlements. The transaction costs of Bitcoin in retail transactions preclude its use. So do you look at Tesla as a one-off and that Bitcoin just simply will never be used at retail because the transaction costs are so much higher than normal currency?
Well, the transaction costs are huge, but the technology, proof of work, doesn't allow more than 5 transactions per second. The Visa network allows you 24,000 transactions per second. So it's not a scalable means of payment, leaving aside the fact that transaction costs are so high, it's never going to be used for goods and services. It's just used for speculation and buying other cryptocurrencies. So it's a self-serving system, but it's not something that's going to be used as a scalable means of payment for goods and services ever.
Nouriel, you mentioned the volume of transactions. What about just a smaller volume but in larger size?
Meaning what?
Meaning if you could transact in large sums of money and move cash through Bitcoin from one country to another in large numbers. So not the volume of individual transactions, but let's say you could move $1 billion from point A to point B with Bitcoin.
Well, you know, even Steve Mnuchin said that we cannot have crypto and Bitcoin becoming the next Swiss bank account being used by human traffickers, terrorists, tax evaders as a way of sheltering their wealth and moving across borders. Right now, across borders, there are slow movements of transactions because there is a KYC, there's a MAL, there's compliance. That's why it's hard to move money from one country to another. That's why there are capital controls. So if you have a system that is illegal that allows you to transfer money instantaneously from a country to another one without any control, of course, that's something that's going to be used by criminals or terrorists or human traffickers or tax evaders. But no system, no country is going to allow that. There's been a crackdown of the G20 on those types of offshore financial centers. There'll be a similar crackdown against the total lack of MAL and KYC in anything that's crypto.
So, Professor, what do you make of the increased institutional buying that we've seen more recently?
Well, you know, I think that you have to ask yourself, is this as an asset? It's not a currency. It's not even an asset. Usually stocks, bonds, loans, real estate give you some income, dividend, coupon, interest, or rent. Some other assets like residential real estate give you use, housing services. Gold doesn't have any income, but there's a use in industry, as utility, as jewelry, and has a past monetary use and as a store of value. You look at Bitcoin, it doesn't have any income, it doesn't have any use, it doesn't have any utility, so it's a pure speculative, self-fulfilling bubble on price appreciation. It's like tulip mania. But in the case of tulip mania, at least tulips had some utility. Even today, people love flowers. In this case, you have an asset that is not an asset because it doesn't have any feature of an asset. It doesn't have any feature of a currency. So it's just a self-fulfilling bubble. That's what it is. Its intrinsic value is zero. And actually, given it's hogged so much energy for producing it, more than Argentina, if you had a pure carbon tax, the value would be negative, not even zero.
Well, some people would argue, Nouriel, that the idea of so much money flooding the financial system, that there is value in being able to put it somewhere and not lose money, that basically not being charged a negative yield is value in and of itself in this this negative interest rate policy world that we're living in. If this is a bubble, can it burst, given where we are with the liquidity spigots, without many other parts of financial markets also suffering big blows?
Well, you know, if it's a hedge against inflation, debasement of fiat currencies, or a collapse of the dollar, you would see a spike in tips in the price of gold, in inflation expectation. Yeah, eventually this monetary policy may lead us to those kind of outcomes, but the price of other assets will be sharply increasing. Gold went up 50% in the last 2 years, has now corrected a little bit. Why would Bitcoin go from 5,000 earlier last year to something like 50,000, 10 times higher, just because there's a hedge against some tail risk of that sort? Other assets will be pricing in. So that's not the explanation of the rise in Bitcoin prices. It's price manipulation of one sort or another. And Bitcoin is not even a hedge against tail risk. During the February-March episode last year, when you had a collapse in US and global equity of 30, 40%, Bitcoin went down by 50%, and other cryptocurrency went down by 60%. So when there is risk off, they're not even hedged against those tail risks. So they don't have any hedging purpose of that sort either.
You say there's price manipulation. Who's doing the manipulating? I will get my words out. Manipulating.
Well, there have been tons of articles showing that there are these pump and dump schemes that are all over Telegram, groups that essentially are pumping and dumping the price of it. We know that Tether issuance is literally $1 billion every other day out of nowhere. No one has been verifying the account of Tether, and it's being used essentially to buy Bitcoin, and is not backed by anything. And there is a whole bunch of wash trading or spoofing. There are exchanges that are front-running their own clients. It's all over the map. I mean, stuff that is just should be investigated and is being investigated. There are a whole bunch of investigation by the DOJ, CFTC, the New York Attorney General Office of Tether and Bitfinex. They're undergoing right now.
Nouriel, what should governments do? I mean, there's got to be a point where in the United Kingdom, the city, the Chancellor of the Exchequer or some FSA body steps in, same in the United States and same in other nations as well. With your government experience with the Clinton administration, how can governments be constructive with the surge in Bitcoin?
Well, you have to enforce anti-money laundering and know your customer KYC rules. That's the first thing. There was a proposal by the Trump administration to make sure that unhosted wallets have to reveal who's behind them. That rule has not yet gone into effect. There are lots of things you can do. There could be investigation of whether there is price manipulation. There are investigations right now about Tether and Bitfinex. Those things have to continue because this is a bubble, and eventually it's reaching now a market value crypto of $1.4 trillion. And when there's going to be a bloodbath, like in 2018, when the price of Bitcoin went initially from 1,000 to 20, and then collapsed from 20 down to 3, at that time, the market value was very small, a couple $100 billion. Right now is a multiple of that. So the consequences and the losses for people are going to be so much severe for institutions and for retail suckers of one sort or another.
Nouriel, comment, please. And of course, and we thanks all of you out on Twitter and your emails watching Professor Roubini here on television and radio as well. Nouriel, people are transfixed by this debate. Explain to us not the thermodynamics, but the proof of work of electricity and its artificiality. How do you see the electrical consumption to make this machine go?
Well, Bitcoin alone, it uses the energy of a medium-sized country like Argentina, because instead of having, like in any legacy financial system, a few trusted individuals or institutions that are validating transactions to make sure that there is no double spend, a bunch of banks. Now you have literally hundreds of thousands of miners who have to do a stupid cryptographic exercise so that one of them wins the task of verifying those transactions, and they're put on a ledger in hundreds of thousands of other computers. It's the most inefficient way of essentially verifying transactions. Doesn't make any sense. And by the way, it's not decentralized either, because 70% of all the mining of crypto or Bitcoin is being done by 5 or 6 oligopolist firms that are based where? In Russia, Belarus, and China. There are countries that have no rule of law. And we have a national security problem right now if we're relying on a bunch of miners in countries that are our strategic rivals, in which there is no rule of law to verify those transactions. So people talk about decentralization. It's not a decentralized system. You have centralization of mining, the centralization of exchanges, where 99% of all transactions are occurring, the centralization of developers, and centralization of wealth. The Gini coefficient for Bitcoin is worse than the one of North Korea, where Kim Jong-un and his family and cronies own the entire country. It's 0.86, while in Korea it's 0.84. It's just a total lie that this is a decentralized system. It's centralized, where a bunch of insiders and whales and others are controlling the entire system and are manipulating it in states in which there is no rule of law. It's just pathetic.